Hi, this is Bang here. In this video tutorial, I want to show you how to set up charts and trading tools using Thinkorswim platform. As you know, Thinkorswim from TD Ameritrade is one of the best option trading platform in the world, if not the best. So even if you are not trading with Thinkorswim, I would encourage you to apply for a free platform for trading setup and analysis purpose. With that, here's what I'm going to cover in this video. We will cover some general setup, and then how to create a watch list, how to set up your charts. I also show you how to read and analyze an option change, how to use a probability analysis tool to plot your trade. You also see how to analyze the risk and reward, P&L line, and also lastly how to place a trade and how to modify your orders. With that, let's jump straight to the platform. When you open the trading platform Thinkorswim for the first time, you see something similar like this. And the first thing I want to set up is some general settings. Go to the little gear on the top right hand corner here. You see one button called Setup. Click onto it. Choose application settings. The first thing I want to change is the color and the font size. Click into the look and feel. Right now the color is called Old School TOS. If I don't like it, I want a lighter color. You can click onto it and change to the light color and change the font size to something like large and apply setting. Here we go. You see the platform being changed to the light color and the font size also getting larger. Okay. Next one, I like to show you how to create a watch list. The watch list is the list of the stocks you want to watch or monitor on the daily basis. So normally you put it on the left hand panel here. Right now it has so many things, a little bit messy. You don't like to see it, just click onto the menu and delete gadgets. Do the same thing for the rest. Now it's already clear up, right? So let's add a watch list into this panel. Go down to the left lower corner here, click onto the plus sign and you see the add gadgets right there. Click onto the add gadget and you choose the watch list. So by default the system will feed you some list right there. If you don't like it, just click into that list and delete. Okay, delete the list. Yes. Now you want to create your own list. Click into that again and choose create watch list. Give it a name. For example, you call it options list, right? And under the symbol, just type in whatever securities you want to monitor or watch. I typically watch a few indexes or ETF or futures and stocks, right? So let's start with the SPX, which is S&P 500 index, which is the most commonly used one. And followed by maybe NASDAQ. Sometimes I trade NASDAQ index as well. Then VIX index, which is a fear index, just to see how the market is fearful or complacent, right? Followed by some futures. So the futures for SPX will be /ES. As you know, futures always start with a slash, right? And then the different character after that. So ES mini is futures of S&P 500. So futures is trading at 23 hours per day and 5 days a week. So you can trade almost around a clock. So you don't have to wait for the market to open to trade. If you want to trade the index futures, you can start trading on the ES mini, right? Other index could be maybe VIX futures. You can also trade commodity futures like crude oil futures, gold future. You also can trade currency like 6E, which is euro futures versus US dollars. Then you can trade something like ZB, which is 30 years treasury bond. You can also trade ZW, which is wheat futures. and sometimes I trade ZS, which is soybean futures as well. So do I have almost everything? Natural gas, something I also trade quite often. Now you can start adding a few ETF like S&P 500 ETF, SPY, gold ETF, GLD. If you want to trade crude oil ETF, USO. After that, you can add few commonly used stock like the one that you like to trade. For example, Apple. And then you can add Facebook, Microsoft, McDonald's, P&G, or whatever stock you want to add later on. And once you've done it, you see the list of the stock right here. And any point in time in the future, you can always add more, like Amazon, or you can add Goldman Sachs, or you can add Citigroup, whatever it might be. So that's how to create a watch list. And if you don't like some stock, you can just open list right there and then click on the stock and just remove it. Next one, I want to show you how to set up charts for your trading. Go to the charts and choose the charts right here. I prefer to split the window into two. One for the short term, one for the long term. So how do I do it? Just go to the rectangle box here, choose two boxes, and here we go. You have split the window into two. Right, on the left hand side, I usually choose the short term chart, which is about 2 days, and right hand chart I use 1 year. How do I change the time frame here? So on the left hand side, if I want to choose 2 days, and each tick I want it to be 1 minute, right? So I just click into the little D button here, choose a time frame, intraday, choose 2 days and 1 minute per tick. Here we go. Then I have 2 days, 1 minute chart on the left hand side. On the right hand side, if I want to set it up as 1 year, then each of the tick will be 1 day. So again, click onto the little D box here and choose the time frame, daily, 1 year and 1 day. That's it, and you have 1 year, 1 day chart. So this is a 1 year chart. On the left hand side, that is the 2 day chart. Now if you notice, the chart looks a little bit messy because it has some grid, some line, some volume graphs right here, which I don't want to have it, right? So how do I clean it up? Go to the setting, chart setting here on the right hand chart first, chart setting, go to the time exit, remove some rollover line, go to the appearance, untick on the grid, go to equity, untick on the volume subgraph, go to the option, also untick on volume subgraph, on the futures, also untick on volume subgraph, and at the same time also untick on the contract change event. After that, click apply and OK. Then it's already cleaned up the chart for you. Do a similar exercise for the left chart. On the click onto the chart setting, time exit, rollover line, appearance, untick on the grid, equity, untick on volume graph, option, same thing, and future, same thing, and also untick on the change event. Now you already clean up the chart. Next one I want to show you is how to add few technical indicators into the charts. For those who follow technical analysis, you see it very helpful. Some of the common technical indicators that people normally use are moving averages. When you do it, just do it on the 1 year chart, because there's no point to have moving average on the 2 day chart. It doesn't mean anything. So on the 1 year chart, you want to add moving averages to here. Just click into this menu and click study and the edit studies. So you need to add 3 moving average lines into here. And the moving average that I like to use is a simple moving average. Just type simp and the system tells you here I have the study called simple moving average. You add selected, study 3 times, 1, 2, and 3. Now I'd like you to change the time frame of each of those into 3 lines: 50 moving average, 150 moving average, and 200 moving average. The 50 days moving average is the one that you want to do first. So click onto the little gear and change the length from 9 days to 50 days. And at the same time, change the color to blue. Click OK. Second line, I'd like you to change it to midterm moving average, which is 150 days. So click onto it again, change the 9 to 150 days, and keep the color at green. Last one, also edit it and change the length from 9 to 200 moving average, and change the color to red, and click OK, apply, and OK. Now on the 1 year chart, you have 3 moving averages as a technical indicator for you. So that's how to add the indicators into your chart. Next one, I'd like you to see how to read option change. So go to the trade tab, and normally you go to trade tab, you see in the first part of the trade tab the underlying information where you can trade stocks, buy or sell. Here we are concerned on option trading, so you click into the option change and it opens up a different series for you to trade. The numbers that are attached to each of the dates are the expiration date. So let's say 9 means 9 days from today till January 18, 2019. So as you can see here, you can choose different time frame for your trades. If you want long dated option, go to like 100, 200, 300 DTE, date to expiration. Or if you want a short dated trade, then choose the shorter one. If you buy an option, normally you should buy somewhere like 2 months, 1.5 to 2 months, to avoid a fast theta decay, which hurt your option. If you want to sell, you should sell something less than 2 months so that you can get the benefit of fast decay in your favor. So when, let's say you open up the option series that is expiring in 65 days. Okay, 65 days, you open it up. And you can see that right in the middle, there's a expiration date, which is March 15, 2019. And on the right hand side, you see different strikes. You can choose to buy or sell, put or call. Now by default, the system tells you 4 columns. Last mean premium, market price, or the premium of these options according to the last transaction. So last transaction price for the option on the call side here, and the same thing on the put side, that's the last transaction price. So you see different strikes have a different price. Next, net change is the option price change versus the day before, okay, the prior day. How much it have changed versus the day before. The bid and the ask columns are the price you can choose to buy or sell. If you want to buy and you want the order to be filled immediately, click into the asks. If you want to sell and want the order to be filled immediately, click into the bid. If you are not so keen, when you buy, you place your buy order at this price at the bid side, and you can bargain up somewhere in the middle and close to the ask side. By doing it, you would have a better price for your trade. Now, if I want to add more parameters to this option information, how do I do it? For example, if I want to add few more Greeks data into option change, how do I do it? Very simple. Click into the layout box here, customize it, and you can choose whatever available parameters there. Normally I would add delta, and then maybe I want to add intrinsic value, and I want to add probability out of the money. If you want to sell option, that's important information. And the theta, how much money I would collect or I would be paying every day, right? So those are the typical columns that I would like to add. If it looks too busy, right, you want to remove some columns, you can do it also. So let's go to the layout and customize it again. Remove some of the columns you don't want to see, like probability OTM or even extrinsic value. You just remove it, right, and keep the remaining. Next one, if you want to see more strikes than just 4, right? If you want to trade beyond these 4 strikes, how do you do it? Simple, just go to the strikes here and choose 8, 10 or whatever, or if you want, you can type the number of strike you want to see. It show you there, right? That's how you navigate through your option table and set it up the way it works best for you. Next one, I want to show you what they call it a probability analysis. Go to the Analyze tab and Probability Analysis tab. And you can see there what they call it a probability cone, C-O-N-E, cone, right? How does this work? So if you type P&G stock right here, and the stock price currently is at 92.46, and the probability range you choose is 1 sigma or 1 standard deviation, which is equal to 68.27%. So what all those parameters mean, right? It means at the current price, 62.46, P&G share price have 68% chance moving between 82 and 102 in the next 66 days. This is like 65 days, right? Yeah, 65 days. I say it again. P&G share price currently at 92.46. It is implied to be moving between 82 and 102 in the next 65 days with a probability of 68%. So what does it mean? It sounds a little bit confusing and complicated, but what does it mean? Meaning, if I decide to buy a P&G call option at, let's say, 102 right here, at the crossover here, 102, and expiring March 15, 2019, I have 68% chance of my option being expired out of the money or worthless. If I buy a call option, I have 68% chance of option being expired worthless. On the other hand, if I sell option, I sell at 102 strike, I have 68% chance of the option I sell being expired worthless, meaning the premium I collect become my profit. Okay, so it depends on you are the buyer or you are the seller, right? When you are the buyer, you would like to have a higher probability, so perhaps you want to reduce this number to like 50%. Okay, so then you say, then I would rather buy 98 call rather than 102. At 98 call, I have 50% chance of my option being expired in the money, and hence could be profitable, right? And if I am selling, I have 50% chance of collecting this premium as my profit. So that is if you are the buyer. Now, if you are the seller, you want to be surer, you want to be playing with the high probability trade, right? So you can choose 2 sigma, which is a 95% chance. So if you choose to sell the $113 strike on the call side on P&G expiring in March 15, you have 95% chance of collecting that premium and make it your profit. Okay, if you sell 113 call option, you have 95% chance of winning. Now, Sometimes you need to go back to the option chain and see at 113 or nearby, can you get any meaningful premium or not. Sometimes you go too high probability, you would have very little or nothing on the premium. So it depends on your risk profile and also the P&L that you could potentially, right, from the trade. So that is how to read this one. And you can adjust this probability cone at any probability that you want, like 80%, and it gives you different cone. And you can see here, the further out in time, the wider the range will be. And it's obvious, like when you have more time, there's a chance that the stock can move in the wider range. When you have less time, you expect the stock price to move in the narrow range. So that's how to read the probability analysis. The next one, I'd like to show you how to analyze a P&L profile of a trade. So let's say this P&G stock again, you look at a chart. Where's P&G stock chart? One more thing I forgot to mention here. You need to link on the watch list stocks here with the chart. So what you can do is you click into the change here, the little change here, and choose whatever number you want. Let's say you choose number 1, red, and every chart you also need to choose number 1, red, and even the trade tab you also need to choose number 1, red, right? Now every time you choose different stock, the system will pop up different charts. So go back to P&G, it shows you the P&G. This is 1-year chart. So you look at P&G chart, the stock price is on the uptrend, and it looks like it's bouncing the 50 moving average, and it could be a good support level, and you want to buy a call option from here with the expectation that the stock price will break out to the new high, right? So now the stock price 92.46. You want to buy at the money call 42.5, right? Just go to the trade tab, choose the option chains. Again, when you buy, I would suggest you to buy with the expiration date more than 1.5 to 2 months. So in this case, 65 days seems to be 2 months kind of expiration, which is good. Then you choose at the money call 92.5. At 92.5 here, if you buy right now, you want the order to be filled immediately, you need to buy at the ask price. Click onto it. What you see here is a system immediately tell you, hey, are you buying 10 contract? Okay, you say no, I'm not going to buy 10 contract. To avoid this kinds of default orders, what you can do is go to the setup, application setting, and order defaults, choose option. Every time when you execute the trade, the system tells you to start with 1 instead of 10. You do it for the future option also, and apply. Now every time you click onto it, the system tells you you're buying 1 contract or you're selling 1 contract, not 10. So that's how you set up the default orders. Now you look at this order, right? The system tells you that you are buying a P&G call 93.5 strike at the expiration date of March 15, 2019. You're paying $3.25 per share times 100 share per contract. That is $325. Now you want to analyze a P&L profile for this trade. You can right click anywhere in the order entry panel here, right click on it, analyze the trade. You don't see it here, but you need to click into risk profile. Here we go. You see the P&L profile of the long call option. And as Adam mentioned in the other video, the long call P&L profile look like a Nike logo. So if the share price stay below your strike price, you lose money. Okay. If the share price go up beyond your break-even point, you make money. Now the green line is the P&L line at the expiration date. 0 line is the break-even point, and plus mean profit, negative mean losses, right? So break-even point is right here, the crossover between 0 line and the price. So the break-even point is where the share price go to 95.75 and stay there until expiration date. If it go beyond, you make money. If it doesn't go beyond that, you lose money. However, your max loss will be 335. Look at here. Look at the left hand lower corner box here. It shows you the max loss at 325, the green number. You want to change the color, just click into it, and let's say you want to show it as the orange color. The purple line, you want to change it to blue line. Yeah, that's what you can do also, right? So as you can see here, the maximum loss for you is $225 when the stock price stay below 92.5 at expiration date. That is your max loss. You cannot lose more than that, right? Now, if you exit the position before the expiration date, the P&L line will look like this blue curve, right? The blue curve is a P&L line as of today. It's January 9. So that's the P&L if the stock price move today. Okay. So today is 92.5. If the stock price open up, let's say it go to 95, your P&L would be about $133. Look at the left lower box there, the blue numbers. So if the stock price go to 95, you make that $129 something as your profit. However, if today the stock price drop to 90, for example, you won't hit the max loss. Your loss will be limited to about $117 only. And the difference between the two lines will be the exit value, which has the volatility premium and also the time value inside. Okay, so if you exit early, you may make more money than this P&L line, and you may lose less than the max loss. Now look at the way the blue line or the daily P&L evolve over time. You notice I'm changing the date from today to the next few days or weeks and see how the P&L line converge with the expiration line. So 1 day, 2 day, 3, okay, the further out in time I have, the closer the line will be towards the expiration P&L. That's the way P&L will move, okay, in the next few days and week. And at expiration date, the two lines will converge completely. That's how to understand the P&L of an option trade. Okay, so let's go back to the order we are pending right here. If you see the P&L line, the profile, it looks good for you and you want to do it, right? You confirm and send. It tells you that, hey, you are buying one contract PNG, 100 share per contract, expiring March 15. 92.5 is a strike price of this call option, and you're paying $325, right? $3.25 times 100. And your break-even point will be 95.75, which is equal to the strike price plus the premium. And the max profit is infinite because there's no limit on the upside when you buy a call option. Max loss is $325, which is a premium that you pay. Okay, if you like this trade, you just send it out. And you go to the monitor tab. Under the working order, you see your orders being pending there for being executed. Market has not opened yet. When market open, you see the market price keep moving. Now, if you are not happy with this price, you want a lower price for your trade, you can always go back and modify the trade as long as it has not been executed yet, right? So now the market has not opened, you can do it. Right click on the trade that is pending and cancel, replace order, and reduce it, right, to whatever price you want, and confirm and send. And now you have the new order replacing the old one. So now you say, I'm willing to pay only $3 per share, not $3.25, because I'm not so keen on it. But you wait for some time and it doesn't get filled, and then you more keen to get into the trade, then you can modify again and raise the price, right, to whatever you want and send it out and check back with the working order, and now you have the new order waiting. So that's how you enter and modify a trade. Finally, I want to show you how to find the data on implied volatility percentile or implied volatility rank. So go to the trade tab, and under the today option statistics, you can find a data here, current implied volatility percentile, current IV percentile. 62% is considered high because in the next few weeks P&G will come out with earning release, and that's why market expecting significant volatility in the next few weeks. So the option price has gone up, and the current percentile is already pretty high. Anything beyond 50 is considered as high. So when you buy, right, better to buy when IV percentile is below 40 to avoid the IV crush impact when it drops, right? So in this scenario, if you're not really keen, I would not recommend you to buy a call right now or even a put option right now. But if you are so keen and you are so convinced that the stock price will move very fast in a very short period of time, yeah, go ahead, but just keep in mind that you have the risk of losing money. With that, I wish you happy trading. I see you in the next video.